What's up everyone, it's Caddy with Money Vesting. Welcome on board for Market Open live stream here. So we are ready to go. We've got the actual jobs report coming out in about 7 minutes or so. So that is going to be very important for the markets, of course, from the expectations of the Fed and what are they going to do after we get yet another print on the unemployment numbers. So once again, thank you so much for joining, everybody. Super excited to see you all. This is my first live stream in the US after a very long time. So very excited to be on the same time zone as the markets so that we don't have to actually end these live streams super early. Or also, I've been thinking about maybe doing like a closing market live streams as well. Let me know what your thoughts are on that. Pretty much going over the market's close 1 hour prior to the close or 30 minutes before the market's close. And like a star, yes, jet lagged. I am quite a bit. I've been up since like 4 a.m. because literally I got some good 5 to 6 hours of sleep. But I'm pretty sure I'm gonna feel a lot tired like later in the day once it's like really nighttime over on the other side of the world. So. Perfect. So Ankur just watched, haven't even seen watching your new AMD video. Yeah, I've been kind of behind on schedule, man. I've been trying to find Wi-Fi and trying to get content out as much as possible because I know there's been a lot of developments. But just trying to catch up, because, man, Swiss Airlines was good, but the Wi-Fi, I feel like I've been ripped off. Like I pretty much got robbed for the Wi-Fi. Like their Wi-Fi plans are not good. Like KLM was the best, Swiss Airlines not so much. But anyway, if you guys can hear me, see me, just give me a thumbs up. I just want to make sure the audio and the video is working well. Hopefully we don't have any connectivity issues because the Wi-Fi apparently should be much better in New York versus India. And also let me know if you guys can hear this. I'm gonna play the actual CNBC just so we can get a good understanding on unemployment numbers. So I'll play this. Give me a thumbs up if you can hear that as well once the time comes. So perfect. Here, so we've got everybody joining in. Qatar is best. Yes, I've heard Qatar Airlines really good. So Oscar says, eat at the time zone you want to be in. Fastest way to change the body clock. Really appreciate that tip, Oscar. Yeah, definitely. I agree. I think if I start I just need to stay up the entire day. Nobody let me sleep, all right? I just need to stay up. Anyway, so markets here, SPY flat, QQQ flat, and the Dow Jones is also very much flat here, only up 36 basis points. We got the 10-year yield pushing up over 13 basis points. The 10-year yield, once again, putting some pressure on the markets at the moment. And if you take a look at the watch tool, there's about a 77% probability now that we're going to see another 75 basis point hike on the November 2nd meeting. So less than a month away for the next Fed meeting. About a 77% probability. That's almost a done deal, unless of course inflation comes in very strongly down. We get a big downward revision, and of course we get a significant sort of uptick on the unemployment numbers as well. This is the actual consensus here. We're expecting 3.7% print in about 4 minutes. That's the consensus, and the consensus right now is about 250,000 jobs added in the month of September. Again, all these reports are lagging indicators because we're going back the previous month and trying to understand, how we actually did in terms of inflation, unemployment, all that stuff. So, Herschel says, why'd you bring your red mic there? I had to. I mean, come on. We have to continue on this trend. So, let's see. If you have any questions, just let me know. And in about a couple minutes here, we'll just get started with the unemployment numbers as well. The US 10 is higher than where it was from when you did the video, citing it tanked. Yeah, the 10-year yield definitely has been pushing higher quite a bit. We'll see if it actually does climb back above 4%. That was a level from back in September 28th. It kind of topped at those levels, and since then we've just been pulling back with the dollar index. Also, again, both the dollar and the 10-year yields, you got to kind of make that link here on a more macroeconomic standpoint. Both of them kind of topped on the 28th of last month. They pulled back, and now we're potentially on our way back higher. And of course, crude oil is also on its move higher. It's now at $89 a barrel. You guys already know what the reasoning is behind that move higher. We've been talking about this for the last couple days here because of the OPEC Plus meeting on Wednesday and the 2 million barrels per cut, which obviously does result in the supply side of things. And as winter is coming closer, we do have much bigger problems to deal with. So if you can turn your volume up a little bit, you should be just fine. And we're ready. We've got about 2 minutes left. So let's see here. All right, so let me know if you can hear this. All right, just give me a thumbs up if you can hear this.
This quickly and try and make sure we can do it before we get to it. Jason, you first. What's the number you're looking for?
250, but I don't think this number matters. It's just one report before the next meeting.
Tyler, how about you?
275. I just think that vacancies and hours haven't come down enough for us to see a substantial slowdown beyond that.
Sarah?
225,000 due to mixed economic data and watching closely for labor force participation and hopefully moderating wage inflation.
That's a key too, moderating wage inflation. Angela, what are you looking for?
I'm expecting about 250, and I think we'll start to see some strong growth continue, but still moderating as a result of some of the Fed actions.
Rick, before we have you start looking out for those numbers, what are you expecting ahead of it? Oh, what is it,
207,000.
Got it. So you're going on the low end so far.
Well, I didn't know that prior, but yes, it seems that's the case.
Okay, Steve, what about you?
I didn't write it down, but I'm at 210, right where Rick is.
Okay, so one thing I will say very quickly, Steve, is it's not just the number this time around. There's a lot of other components, participation rate.
Yeah.
As Sarah mentioned, the wage impact of all of this too, what's happened with it.
Yeah, and all of it weighing perhaps on Fed policy. They want to see some slowing down, but they don't want to see a collapse. I don't think they like to see the number of job openings was falling, so that's a good sign. And also looking for perhaps some moderation in job growth while we do this transition coming from those industries that had a lot of hiring during the pandemic, and those businesses have cooled off, but still some places that are running below where they were before the pandemic, some sectors.
Why don't we take a look at some of the markets ahead of this? As you saw, the Dow Futures are indicated up by about 90 points ahead of this. It's been a mixed reaction. You can also see the NASDAQ was a little bit lower. S&P was right about in line with expectations. And we've also been watching what's been happening on the yield curve. There's the NASDAQ right now, down by about 22. But if you're watching the 10-year ahead of this...
For November, it is going to matter for December, but we're going to have other data by then too. You know, I think we'd need two low CPI reports in a row before November to do anything, or precisely zero, because we're only getting one report.
Precisely to the time we're waiting for this. Rick Santelli, why don't you take it away and let us know what you see.
All right, here we go. Non-farm payrolls for the month of September on the big jobs report, 263,000. 263,000. Now, if we go back, this is really fascinating because 263,000 is the low water mark going back to April when it was 263,000. 288,000 is private payrolls. And if we look at the change in manufacturing payrolls, it's about as expected, a pretty robust 22,000. The unemployment rate, or U3, is 3.5%. Equaling the July read, which is the low water mark. And in this case, bad news, good news, bad news. Maybe you don't want to see unemployment rates moving lower. And if we look at what's going on with earnings, up 0.3%. This makes 2 months in a row, it's up 0.3. That's month over month. Year over year, it's up 5%. As expected, a downgrade from 5.2, which we've had the last 3 months. And if we look at the work week, 34.5 equals our last look. 34.9 actually is the number you want to comp to with regard to history. That is the higher watermark. And finally, if we look at what's going on with U6, the underemployment rate, that's 6.7, and that equals the best level. We've had a couple of 6.7s in June and July. Okay, labor force participation rate, always a favorite, but in this case, it moved in the wrong direction. 62.4 in the rearview mirror, and expectations take a tenth away, moves to 62.3. 62.4 is the high water mark there. If we look at interest rates, well, we are now up 5.5 basis points in 10s that were virtually unchanged at 383. And if we look at 2-year note yields, they've jumped up to 432. They were at 428, up 3. So now they're up closer to 7.
So there we go, unemployment moving down 3.5%. So let's just take a quick look on that report here. And you know, obviously that once again stokes that fear that this is just going to pave the way for the Fed to again raise rates more aggressively. So actually this is not for September. Let's take a look. All right, so this is for September now. 263,000 jobs added in the month of September. Unemployment rate edged down to 3.5%. So if you come back to the actual chart itself, you'll notice that we're once again back down to where we were just a few months ago. So we kind of ticked higher a little bit from 3.5 to 3.7%. We're back down to 3.5%. Once again, very, very strong jobs report here. I mean, this will take some time, but I wouldn't be surprised if this once again, pushes up to over 70. Well, actually, it's slightly lower, but I wouldn't be surprised if over the next few hours, this kind of Fed funds futures starts to price in 80%, 90% probability for another 75 basis point hike, considering the very, very strong jobs report that we just got in the US. So much higher than what the anticipation was. Obviously, the markets are selling off on that because good news for the economy, but obviously not great news for the markets itself because of the higher anticipated rate hike from the Fed. So they're not going to be slowing down anytime soon, considering the jobs market remains extremely tight. We've got the SPY down 62 basis points. The Nasdaq's down 1% almost immediately, and the Dow Jones also dropping about 27 basis points, and the US 10-year yield climbing to a little bit over 3.87, so up over 1% right now. So there we go. Again, good news for the economy, bad news for the market. Really, either way, it wasn't going to be like super great. I mean, sure, the markets might have moved up a little bit if the unemployment rate did edge higher, 3.8, 3.9%, but that would have really showed that the economy is really starting to weaken. Now, the JOLTS numbers came out earlier, I think this week or last week. I'm still trying to catch up to all the days and the times here, but they actually showed a significant pullback in the JOLTS numbers, right? The job openings pretty much went from 11 point and some change million over to down to 10 million. So, we were talking about whether this is because of jobs being taken away from the companies, they're not posting any listings anymore, or they're getting filled by people. And today's strong jobs report does suggest there was a lot of labor sort of back in the workforce, a lot of people kind of getting jobs once again, and 260,000 is a really, really, much better than expected number. And as a result, we'll get that 75 basis points, unless of course the inflation on the 13, which is next week on Thursday, comes in at really, really low numbers, which I doubt. We have some momentum on inflation with respect to oil prices, because crude oil was actually down in the month of September. So if you come over to the monthly chart, we were down in the month of September over 10.2%, and shelter was also pulling back. So rents did pull back in the month of September as well, arguably according to apartmentlisting.com. So we'll see what type of inflation read we get, but October is not looking very good either, because it's only been 1 week. It's not even been a one full week. And crude oil is up 12.5%. So we're pretty much climbing back up to almost $90 a barrel. So that is something to pay attention to. I've mentioned this and repeatedly in my previous videos, that crude oil going up is not great news for inflation. So we're gonna have to take a look at that, as we kind of move forward as well. So, all right, Oleg says, perfect news for earnings and EPS, and should rally on earnings. Well, yeah, I mean, that's something to pay attention to as well. Earnings, we're now starting to finally get a lower leg on earnings as well. AMD, like out of all the companies that you'd expect not to cut guidance, finally did yesterday. And of course, the stock price is down almost 6%. So even companies like AMD are cutting guidance. So it's a pretty telling sign. I mean, entirety of this year, last, I think 8 to 12 quarters, AMD has been extremely strong with respect to their guidance. I mean, Lisa Su's repeatedly been very, very good when it comes to offering some visibility from the customer standpoint. But even companies like AMD are now starting to kind of feel that pain from the slowing demand for PCs and of course their chips and stuff like that. So those are some things to definitely pay attention to, and we're just getting started. Like, we're literally getting started with earnings revisions. So we've got to pay attention to that. And if the earnings come down to, let's say, 225, 220s, or 200s, well, you just simply apply an earnings multiple and boom, there's your target on the S&P. And it's just a really difficult environment, unfortunately, for the markets to find any momentum, considering that we are hiking interest rates so aggressively in a weakening, deteriorating economy. And unemployment's not going to show up, in my opinion. Again, we talked about it, I think, earlier this week in our live streams, that unemployment's not going to start to show a lot of the impact until after interest rates are already at 4%, 4.5%. So at the tail end of this year, November, December, like, we're going to see rates at 4.5%. I mean, that's at least what the expectations are. So if you come over to, probabilities for us to get up to 4.25 4.5%. There's a 66% probably. Like by December, we'll be at over 4%, no doubt. And that's when the real, headwinds begin for companies and the economy to grow at 4.5% rate, which is extremely difficult. And that's when you'll start to see a bigger impact on the economy, on the unemployment numbers. So, majority of that sort of pivot expectations obviously should not be priced in for 2022. Really, it's not even a question of whether the Fed's going to pivot this year, because they're not. I personally don't think they are. It's a question more for 2023, right? And even in terms of pivot, it's not so much about cutting rates. It's about when are they going to slow down in raising rates. That's the first step, slowing down in raising rates and then pausing and then starting to cut. They're not going to immediately reverse course, regardless of how brutal it gets from an economic standpoint, which is kind of like the bad part here. So, all right, markets here, obviously pulling back on the unemployment report. Let me just go over some of the comments here, some questions. So do you think the jobs report will crash the market today? Well, not necessarily. I just think that we might be, we might pull back a little bit on the expectation that the Fed is still going to move forward with their 75 basis points. But I think the bigger economic report that's going to be moving the markets more is going to be next week's inflation print. So unemployment's good. It's a good read on how the jobs market is doing. But, just a 1% down day to 1.5% down day, I think is appropriate for what we got from the unemployment number. And kind of moving down back to 3.5% again shows a very, very tight labor market for the U.S. All right, let's see here. Lots of people talking about Tesla. So let's see, what are you guys talking about Tesla here? So Ankur says, I'm very happy since I'm not invested heavily in getting better deals for long term. Yes, and that's the thing is, again, raising cash, increasing our buying power. We've been talking about this for a long time since volatility has been trading at lower levels, roughly in the 2021 levels back in August. So that was a really, really important move for us to make, to raise capital, increase buying power, get our cash exposure to better places so that we can take advantage of those deals that are coming down to better and better value. And in the short term, yes, there's going to be a lot of setbacks. Like, we talked about it in our AMD video. So make sure that you do check that out if you want a much more detailed analysis on that revised fair value. I'm also kind of guiding for Q4 and what the expectations are going to be from Lisa Su and what the guidance is going to look like. So I've already notched it down by a few percentage points for the fair value. So make sure that you do check that out if you haven't already. Ankur says, thanks to you. To be honest, I'm patient because of you, Caddy. So yeah, patience is a very, very important psychological factor to consider. Definitely will help you in your success when it comes to investing, trading for the long term. So let the prices come to you. Be as frugal as you can be in the markets and be really, really cheap. I mean, don't let anybody tell you otherwise. There's nothing to flaunt by overpaying in a stock. There's definitely a lot that you can do when you're underpaying and you're definitely getting a much, much better deal. So Marin, what do you think about the jobs data? I do think that there's a lot of things brewing underneath that we're not quite seeing just yet. Like I said, it's going to take time. It's going to take at least a few more months until we actually start to see unemployment take higher. I mean, the Fed itself has pretty much a target of, I think, 3.8%. Let me see, Fed, SEP. All right, let's see. I think they did put a target of 3.8% in their summary of economic projections. So let's see. Unemployment rate, they actually put for 3.8%, right? So they did knock it up a little bit from 3.7 to 3.8%. We've got two more prints for 2022, November and December. So they are expecting unemployment to actually go up. And then look at that. 2023, they're expecting unemployment to be 4.4%. I think they're definitely being very generous here. I wouldn't be surprised if it's actually closer to 5.5, closer to 6% even, considering that we're just due for a pretty significant deterioration when it comes to the overall economy, just considering where interest rates will be. Now, a lot of things can change if interest rates don't actually get up to 4% or 4.5%. If inflation actually does roll over, considering Jeremy Siegel, Kathy Wood, Elon Musk, I mean, a lot of people have been kind of voicing that there's a lot of deflation brewing in the economy. And once that starts to show up, then the Fed can kind of take their foot off the gas in terms of raising rates. But that's kind of like a wait and see approach at the moment, considering what we know now. I do think that it's going to start to show up in 2023, like Q1. So here's the thing, right? We've talked about the window of opportunity. This is it. Like next 3 to 6 months is when we're going to get that opportunity to really get max pain, not just from an unemployment inflation standpoint, but also from one thing that I've repeatedly mentioned. And what is that going to be? I'm sure you guys can all guess it right now, that most of that is going to take place in the next 3 to 6 months. So let me see if you guys can guess that while I read some of the questions. Quick pop quiz here. So Gabrielle, Caddy, Bitcoin has been holding around 20,000. You think it'll stay around that range till year end? It's been a very strong support for Bitcoin. Yes, Gabrielle says earnings. Yeah, that's exactly right. Earnings, and Oscar also says earnings. Yep, so that is exactly correct. So we're gonna get a lot of those in the next 3 to 6 months. And FactSet's been really, really good in kind of posting those reports and what the current earnings estimates are. And of course, we've got a spreadsheet of our own kind of tracking earnings estimates and where the current P multiple is versus what the averages are last 10, 15, 20 years. And it's a good fundamental overview of the market, right? It's a good bird's eye view of what the overall valuation looks like for the markets as a whole. So again, that's available for all the members to access. You can pretty much view it whenever you want. And I think it's a good bird's eye view for the fundamentals. So when it comes to Bitcoin, 20,000, has been a previous resistance, I think, for Bitcoin, right? So it's been a level that we kind of, peaked back in December of 2017, and then obviously sold off pretty aggressively. So there's a lot of different flow models and charts and whatnot that pretty much do suggest that this is about as low as it's going to go. It's been holding up really well. You're right. But again, from a fundamental standpoint, Bitcoin, it's hard to value. What's the actual valuation for Bitcoin? It's mostly dependent on, this is a prime example of demand and supply, right? If there's more demand, price is going to go higher. If it's not, then obviously it's going to struggle to break out. If there's more supply, if there's more people selling off, then obviously we're going to see more downside. So it's really a question of, whether we're going to see a move towards riskier assets or not. And considering how much the yields are going higher, there's definitely an opportunity cost to consider here. Like we've talked about this. I don't know if I don't think I have my yields chart open here. Let me just open that up very quickly. But what we're really paying attention to is the yields, the bond yields, because if they keep going higher, then there's a big opportunity cost related to where you put your money, right? You can go with the I bonds, right? They'll pay you 9.6%. I think they were going to get that number revised very soon. But here, let me just find my bond yields. All right, where did I? Yield curves. Okay, there we go. So yeah, there's significant demand for I bonds as well, paying you over 9%. Then you got short-term yields. You're looking at 1 year 4.118. We got the 3 month paying you over 3.3. 6 months paying you 4%. So it really is a question about whether these riskier assets are going to be preferred over something that's risk-free. And asking about Bitcoin is no different than asking about equities because they're both considered riskier assets. And if the environment's not risk on, well, we're either going to go sideways or we're going to see some more downside. So that's really what it comes down to. Matthias says, hi, nice job, love your videos. Your thoughts about the bond yield curves being so high. How does it affect the market? Greetings from Australia. So really what we just went over is, again, if the yields are higher, people are going to find better places to park their money. All yield curves right now are inverted with the exception of the 10 and the 30, which was inverted for a very long time, actually is still inverted right now because the 10-year yielding more than the 30. And the only yield curve that's not inverted is 10 versus the 3 months. So all the yield curves right now inverted against the 10-year yield pretty much suggests that there is a recession that's coming. We don't know when, but there is a recession. This is one of the leading indicators you can actually find for recession in the US. So it's going to happen. Like 2023, there's absolutely, does anybody doubt here? In the live chat right now, there's not going to be a recession in 23. I would love to actually get your thesis as well as to why you think it's not going to happen, but I think most people do expect it. So this is a big leading indicator for us, and I feel like that it's going to happen in 2023. So that's kind of like the overall sense. Kale says, how do you feel? Are you okay? Not sounding well. Yeah, no, I'm fine. I'm just a little bit jet lagged. That's all. But yeah, I'm super excited and pumped to just do the live stream and of course get started here. Same time zone as when the markets open and close. So very excited about that. And yeah, we'll also do like maybe if you can, we'll do like a closing market live stream as well. So I think that might be very interesting for folks to kind of join in when the markets are closing. So we'll definitely do that as well. Run over to the exchange, sneak in and ring the opening bell. Imagine just me just standing over there, just ringing the opening bell here for the markets. Oleg says, my tip is that we have seen the bottom about a week ago. Again, when it comes to bottom prediction, it's very unlikely that anybody's going to get it right. Maybe some people might get lucky, but it's really not so much about calling a bottom or not, or calling a top, because it takes up so much energy. That's not the point. Our goal is to understand where you can find the most optimal risk-reward ratios considering what you know, right? That's the goal here. To be a more efficient trader, investor, you just have to look at everything from a point of risk versus reward. That's all it is. Like, if the markets are overbought, if valuations are high and the risk is just too high for that reward, stay patient. Just, don't invest. Like, just be patient, let the prices come to you. And when that becomes more attractive, when you kind of tilt that risk reward ratio in your favor, that's when you start to kind of look at individual companies, start doing your analysis, as opposed to like trying to figure out exactly when that bottom is going to be, because I can tell you nobody's going to time it. Nobody's going to pick the exact bottom. Maybe you can call it once if you're lucky, maybe twice in your lifetime if you're really lucky, but nobody can do it on a consistent basis. So it's great from a perspective of kind of getting people engaged and talking about, oh, when's the market going to bottom, or like when's the top, when's the bottom. But in practicality wise, in reality, nobody's going to be able to do it. So look at everything from a risk reward standpoint, or where are you getting the most reward versus risk. So yes, Sharpe ratio, very good. Yes, Oscar says all about the fair values when you know that you buy, and then no stress, just follow the plan. Exactly. Following a plan is really, really important. Steve said you need to move to the US. So, all right. Siren says, whoever's in the US and is meeting Caddy, come on, get him a green mic as a present. I already have a green mic. I'm just not using it right now. So actually, I do have a very, very small black mic as well. So I know that a lot of people were very excited when I was just like not using my red mic when I was traveling. But yes, the red mic is back. I actually posted a story. By the way, follow me on Instagram if you want to kind of get some behind the scenes, of my travels. And of course, I'll be posting a lot of pictures that I meet with subscribers and members. I'll be posting a lot of community stuff if you want to take advantage of that, if you want to check that out as well. So definitely would really appreciate that. My Instagram should be down below as well. So volatility here is up 0.2%, so not a whole lot, but again, just a little bit over 30 levels. 35.40 is what we're really paying attention to once again start being a little bit of a net buyer. Last time I actually picked up shares, it was when the VIX was at 34.88. So I pointed that out in our Discord community. We talked about how the risk reward is really appealing back on September 28th. So if you once again get back up to 35.40 levels, then we're back in that rhythm of things. For when the VIX is high, it's time to buy, and of course when the VIX is low, it's time to go. So we're going to be paying attention for that as well. And looking at some cash secured put. I'm actually thinking about AMD's cash secured put once again at lower strikes. So that's something that's going to be part of the plan, considering that it's down over 6% right now, even though they're still going to be growing 50% on a year-over-year basis. And of course, also thinking about Google, although I have dollar cost average a little bit in the low 90s for Google. So Vitruvia, why are we falling? Well, we got a very strong labor report, jobs report. And of course, the interest rate expectations are once again repegged to 75 basis points, right? So this is the current projection. So we did fall quite a bit at 75%, but again, I mentioned that over the course of today, wouldn't be surprised if the Fed funds futures is once again back over 78, 80% or even higher because of the aggressive Fed that we're going to see. So yeah, I think it's pretty much a done deal. 4.5% is where we're going to be by the end of this year, and that's when 2023 is going to start to look really interesting from an economic standpoint and what actually ends up happening. So hello from Bay Area. Hello to you too. So perfect. Uncle says come to Florida. Definitely will next time. But this time I'm only on the East Coast and just a very quick trip to Denver, Colorado. So all right, so again, if you have any questions, let me know. Dewey says ASMR in the lounge talking about Tesla. That was really you guys are so funny. My God, no, it was really difficult, to be honest. It was a challenge because there were so many people around me, and they were just like looking at me like I was crazy, just holding a mic, and had a really small ring light that I just bought, for my travels. But it was difficult, to be honest. Like I've never done that before, so I was kind of like super conscious about that as well. But yeah, definitely, you know, for the content and for you guys, of course, would be happy to do it. So yeah. So Tim, what time is the jobs report? The jobs report comes out about 23 minutes ago. So should be, you can actually go back. We just covered it live. So if you kind of scroll back on the live stream, you should be able to see the live numbers, and that's kind of breaking down the jobs report as well. Oleg, are you buying SoFi as it's reached your fair value? So for SoFi, right now, what we don't have is an actual fair value. Like I have a fair value from a price to sales multiple standpoint, discounting all that back by 12% on a more market cap basis, but I don't have an earnings fair value or free cash flow fair value on SoFi. So there's a difference, right? There's a significant difference because execution really matters, right? So you can pretty much look at a company from a price to sales perspective and understand, okay, if the company is going to grow revenue by this percentage and get a this P multiple or price to sales multiple, what is going to be that market cap? So that's the method that we have used for SoFi. But since it has no earnings or free cash flow, we're going to have to wait and see where that might end up being. But no, not yet. I haven't picked up a SoFi yet. Definitely it's trading at a very attractive level at these support levels. I mean, I kind of breached $5, came down to low 479s. I think it was a new 52-week low for the company, down to 479 if I'm not mistaken. Yep, so that was a new 52-week low. So again, we'll see. We'll see if I actually want to take advantage of that or not. But so Nikhil, I've actually done a video on Qualcomm, so make sure that you do check that out if you haven't already. We kind of did break below this support level, but then we quickly reversed back up, and right now it's down about 3%. I feel like a lot of the chip companies, so Nvidia's down 4.5%, Qualcomm's down another 3%. Intel is just been on a slide here, down almost 4%. Let's see, LCRX, or is it LRCX? Yeah, Lam Research is down about 3.3%. So pretty much most semi companies, we've got a separate watch list for that as well. By the way, all my watch list and all my TradingView charts are easily accessible. A lot of people actually don't know that, but you can actually go get the links from our Discord and actually check out the entire watch list. It'll show you something like this. It'll literally just show you my entire watch list for different sectors and different stocks that I have, and also give you access to my TradingView charts, like literally automatically updated. You will see what I see on a regular basis on my TradingView. So take advantage of that if you can. Ramkey, I'm in Denver. Can we meet? Yeah, absolutely. I mean, we'll see if you can figure something out for a quick meet in Denver, Colorado, if people are there. Yeah, we'll definitely would love to meet with you as well. So if you are in our Discord, just message me and we'll arrange something. Again, it's really important that you message me on Discord so I don't forget and we can schedule something. Dave says, Caddy, let me know if you come down to DC. It will be nice to meet you in person. Yeah, absolutely. Dave, I will definitely let you know when I'm in Washington, DC next. So Lauren says, no more hope for the markets. Well, not in the short term. You're absolutely right. I think short term, there's definitely going to be a lot of headwinds. You're absolutely right. I think the markets also has never bottomed during a rate hike cycle from the Fed. So we're going to have to be really, really patient, right? So we have talked about this. We have talked about this quite a few times, that the short-term outlook is not great, right? We're going to have to deal with a lot of setbacks right now, but these are the opportunities, right? You never want to be in an environment where the markets are keep going higher and higher and you just kind of like keep overpaying every month. Instead, what you're doing right now is, of course, the market's coming down. As brutal as it is, of course, it's not a great feeling to be actually investing or dollar cost averaging or even trading for that matter, but you know that you're getting quality assets at a much lower price than what 6 months ago it looked like. So it just really is a game of patience right now. So also Smart says, wasted my entire year with this garbage market, nothing but a waste of time this year. Well, really, I mean, that's a different way of looking at things, definitely a different mindset, I think, but you really need to look at it from a perspective of what's your end goal here, right? How long are you going to be investing for? Are you just looking to make a quick buck? Like, are you looking for that instant gratification, or are you actually looking to invest and understand the framework, understand proper structure for the next 10, 20, 30, 40, 50 years? Because I can tell you from experience that this is not the first and the last bear market or recession that any of us are going to witness. Okay, so the more you get comfortable by being uncomfortable in these situations, the better you're going to be long term. So it's just a little bit of a change in the mindset that this is not the first time, this is not the last time either, right? I can predict the next recession, I just don't know when, but it will happen, right? So Yeah, so of course, trading options, definitely very, very exciting. So will you try TTCF? I was actually thinking about this today. Like, am I going to be actually trying Tattooed Chef pizzas or Tattooed Chef, products or not? Kind of go to Target, go to a place, kind of pick up Tattooed Chef and see what the all fuss is about. Gabriel says 2032, next recession in September. All right, so Lauren, again, this is not necessarily a dip. So again, we gotta understand the trend and the overall direction that we're in. So again, we've talked about how this is not a dip by any means. Like, don't mistake this sell-off with a dip. I mean, it's a downtrend, right? So we're coming off lower highs and lower lows. A dip would have been buying like when the markets were in an uptrend and they were pulling back, right? So you're not necessarily buying the dip in this environment. You're pretty much buying into a bear market, right? Because we're in a downtrend. So that's, again, long. We can talk about for hours about long term, and of course what the next short term looks like, 3 to 6 months, 12 months out looks like versus what the next 5 years, 7 years look like. So again, maybe we'll do that in a separate video. But Ankur, will you ever buy a call option? Only leaps is what I'd be looking at. But even in leaps, the time expiration is only out to like about a year, maybe if you're lucky 2 years for some stocks. But again, 1 to 2 years really does look a little bit bleak in terms of that economic sort of conditions and from a more macroeconomic standpoint. So not necessarily looking at it right now, but that is something that I think will start to get very attractive as stocks continue to sell off. Because if you can pay 40 to 50% of the cost of 100 shares versus actually buying 100 shares and get the same amount of return, if not more, on a percentage basis. So I think that's going to be really, really attractive, right? It's going to be very good for the long term. But it's just a question of getting that cost basis down from a leap standpoint. All right, so we are selling off quite a bit here. We got the Nasdaq down 1.65%. We got the S&P down 0.8. Actually, the S&P is down over 1%, and the Dow Jones down over 0.83% right now. So definitely selling off quite a bit. The yields are pushing back higher, up over 3.885%. So yeah, once again, getting a little bit of a headwind from the dollar and of course the yields. Caddy, CSP AMD strike $50 out to 17th March. Will probably sell for $450. AMD for $45.50, never been this attractive. Yes, so what you need to do, Victor, is kind of flip those numbers around and look at it from a perspective of, okay, $450 divided by $45.50, you're getting about a 9.8% return on collateral out to March 23, which is about 6 months out. So is a 9.9% return good for the next 6 months? I think it is. I think it certainly is. But can AMD come down to $50 for it to be in the money? That's about a 22% decline. You know what? That might actually sound really good. I think AMD at $50 would be just crazy. I mean, I don't see AMD coming down to that level unless, of course, there's significant deterioration in overall economy and earnings and revenues and stuff like that. But I think another 22% would be very, very brutal on the oversold side for AMD, considering that it's already down over 61, 62%. So I like that. I like 9.9% over the next 6 months. So Kevin, Caddy, you're not seeing earnings as a massive short-term catalyst. Kevin, catalyst as in catalyst to the upside or catalyst to the downside? What type of catalyst are you referring to? To the upside? Not quite. I mean, we're starting to already see, a lot of companies revise their guidance down. I mean, Apple hasn't issued guidance since COVID started. Nvidia with a huge guide down. AMD with a huge guide down as of yesterday. Lots of companies have been struggling. Meta, Google, Netflix, You know, I mean, Amazon, like you name it. So I don't see why that would be a catalyst to the upside. If the overall S&P 500 earnings start to deteriorate, well, why would the markets go up? Kevin says, but these stocks are already 50% off. Yes, that's true, but this is also because of a different reason, right? This is also because of interest rates going higher. So what really happened was, I think we saw this sell-off because of higher interest rates in a significant quantitative tightening environment. That's all getting priced in. But what didn't change were the earnings estimates. Like, that's the weird part about this entire sort of topic is markets sold off, just the price did, on interest rates, inflation, more macroeconomic, right? Because that was a big reason why the market started selling off. But the earnings estimates didn't budge, right? They pretty much were pretty intact. I mean, even if you take a look at right now, let's see if we can actually find it on FactSet, because I really want to go over that report, which is really, really interesting. All right, let's see if we can get something here. We already talked about the largest cuts to the earnings per share numbers, right? So let's see. All right, here. So this is the chart that I wanted to go over. If you take a look at where we were, so this is 2021 November, right? So I don't know if you guys can see the dates. It might be a little bit blurry, but this is where 2022 started. This is January. And if you go across here, let me just take a screenshot of this. So if you take a look at this over here, where did we peak, right? We peaked in April, like April 2022, like April to like May 2022 was like the peak of that earnings. And even going as far as June, like in June, like we were at these levels, 241 for 2022. And this is for actually no, that's for 2023, the one that I just marked, and this is for 2022. And you'll notice we haven't really budged all that much. Like we're still pretty up there, you know, like we haven't really seen a significant pullback on earnings, even though the macro picture has completely deteriorated over the last 6 months or so. But the earnings, for some reason, have not been revised down. So that's one of the headwinds for the markets, really. Yeah, so it says the only upside is pause in interest rates hike or cut in interest rates. Well, there's other catalysts as well. The most important catalyst really is inflation. I mean, at the end of the day, like none of this would be happening if inflation wasn't as high as it is. So there's two catalysts really that the market's going to be relying upon. It's inflation and interest rates. You get that down, you have a pretty good understanding of where the markets are headed. All right. So yeah, thank you. Tesla will deliver the first semi-truck to Pepsi 5 years after Elon Musk showed off prototypes and began taking deposits for the electric big rigs. The car maker will hand over semis to Pepsi December 1st. Lady says, after your rate hike in November, the tide will turn bullish again, and you will hear everyone talking about the Santa Claus rally. Yeah, we'll see. We'll see if there's a Santa rally. I know that there's going to be one person talking about a Santa rally. We all know who that is. Wink, wink, right? So that person's obviously been super bullish all of 2022, and they're pretty much staying true to their statement. So yeah, I don't know if you guys can hear the ambulance, but that's New York for you. But anyway, so if you have any questions, let me know. That is you. Oh, come on, Oscar, that's not me. We know who it is. Who's going to be talking about a Santa rally, just like they did last year. But anyway, so markets still pulling back here. So come on, Santa. Tom Lee, yeah. Oscar says Tom Lee, correct. But anyway, the yields back over 3.9%. So again, acting as a bit of a headwind for equities, and in an environment where yields are going higher, interest rates are going higher, we just can't expect the markets to find any ground for solid rallies. It's going to be difficult. Victor says Delhi is much quieter. It is. It's a much quieter place. New York is going to be loud and dirty. really a different environment. And crude oil is up to 89. Volatility is up 0.07, so not a whole lot. Bitcoin's falling right back over, down almost 2%. So Patrick, energy stocks still edge higher despite market sell-off, but yeah, well, because of crude oil. You know, I mean, they're up to $89 a barrel, so they're definitely on another sort of push higher in the month of October. They're already up over 12%. So you've got, you know, XLE that's up over 14% this month. Surprise? No, not really. I mean, crude oil is up. Chevron's up over 12% this month. Actually, yeah, Chevron's up, crude oil is up 12%. Devon Energy up 20% this month. ExxonMobil is up over 16% this month, and Occidental is up over 14.5%, almost 15% this month. So again, not a big surprise. Crude oil is up, so there you go. So yeah, QQQs with a pretty big gap down right now, trading now back under 275. So we'll go ahead and turn these levels back into a resistance at the moment because of the pretty juicy jobs report, and support level is going to stay put down to 268 right now. Resistance right now 275 all the way to 279. And for SPY, we're paying attention to levels closer to 363. So that right there is going to be that next support to watch. All right, Caddy, what do you... No, I'm not missing your question. I'm just kind of reading one by one. What are you doing in NYC, visiting our business? Maybe you want to interview Josh Brown. So, no, not interviewing Josh Brown, although I would love to. But yeah, just visiting friends, family, and then one of my best friends getting married. So just going to be attending a wedding in Colorado. So markets are right at the open. We'll see. I mean, we do have a pretty big gap to fill in. So, but on a day like today, when interest rate expectations are, you know, pushing higher, it's difficult for the markets to find any ground. So my expectation would be that we would either consolidate sideways or maybe we find some more room to the upside, kind of fill that gap in. By the way, we haven't done our poll, have we? I don't think we've started that poll. Let's do that right now. We still have about 20 minutes left for the markets to open. So markets today, green, red, and then flat. All right, so here we go. Even though I do think that the majority of the expectations today will be red, but we'll find out soon enough. So, you know, there's another thing. So there's another component that we are going to be kind of adding to our individual stock analysis. That's more on the qualitative analysis aspect. But the only problem is, you know, I need to figure out a way to kind of condense these videos so that it's easily digestible for all of you guys, because we do spend a considerable amount of time looking at the financial statements, income statement, cash flows, balance sheet, kind of doing the complete analysis on the quantitative analysis side of things. But I really want to spend time on the qualitative aspects of the business as well, kind of going over the management, how's the business, what's the market, total addressable market, what's the opportunity or the idea for the company, and what's the growth looking like. The only problem is, again, it's going to start to feel like really long videos, because this is, again, deep research that we're going to be doing and covering both the qualitative and the quantitative analysis for these companies. So you get like a complete holistic picture on the company itself, because a lot of the early ideas may not be figured out and may not be like great on a more quantitative basis. Like they may not have the cash flows or the earnings early on, but they do kind of make a lot of sense from a more qualitative perspective, right? So a lot of the research will be focused on that as well moving forward. I'll try to kind of include that component as much as we can, kind of talking about the management, talking about their background, talking about the quality of the business and, you know, their customer base, reviews and products and all that stuff. But again, I do apologize if the videos get longer. They may not be as well exciting or, you know, short as what we are usually prone to doing. Maybe 15 to 20 minutes are the usual times, but they might exceed to 25 to 30 minutes. But there's going to be more value sort of from the company standpoint. So if you're looking at more detailed analysis, maybe we can do like a couple different videos. I don't know, I'm still trying to figure that out, but that's the goal here. That's what we're trying to do, is like every stock is going to get the time and attention that it needs so that we can have a much better understanding of that business. So yeah, let me know what you think about that. So I would definitely consider it. Kevin says transitory to soft landing to burst into fire crash. Yeah, that's been kind of like, there's also a meme, right, for Jerome Powell, that what he's been saying has been kind of like, it's been updated for the last 6 quarters or 8 quarters or so. And Avi says, do you think AMD finished its head and shoulders fall, assuming 100 ways to the neckline? Yeah, so AMD, again, has or pretty much broke down from this head and shoulders, right? So, we talked about this in our previous updates. Right now, I would, yes, definitely call this as a big breakdown below the neckline. We definitely need to, Richard, man. Need to breathe. So, $71 is going to be that resistance right now. We've got that 200 SMA there, and we've got a neckline sitting right over there for AMD. So, in order for this pattern to be finished, the head and shoulders, we just have to pretty much. So, right now what we're seeing is we got that breakdown. We went right back up to fill that gap or fill that resistance back up. So, we got rejected there. And right now we're on our way back down. So $58 is really what I feel like is going to be a very strong area of demand for AMD, considering that's been a previous resistance. So at $58 is going to be very strong support. And for my fundamental fair value, for my revised fair value, I actually did a video on AMD just earlier today. So make sure that you do check that out as well. NVIDIA at low 100s. So NVIDIA under $100 short-term possible. Well, yeah. We've got that 300 SMA sitting at about 101. So, that's the level that I'm really paying attention to. That's what I'm watching. And right now, short-term support is going to be sitting roughly, in other words, around 127, 128. So this right here is going to be that level to watch. Nick says, your in-depth videos are always highly informative and extremely useful. Please don't curtail them, Caddy. Okay, so that's good feedback. Again, I want to know from you guys if you want me to continue. So the thing is that fundamental analysis is actually broken down into two different ways, right? Qualitative and quantitative, right? We do focus very much on both, but most of the videos kind of focus on the financial statements and income statements and balance sheet and cash flows and all that stuff, kind of looking at the valuations and the intrinsic value and kind of forecasting, understanding the balance sheet, all that stuff. So it's more heavily weighted on the quantitative analysis side, but I just wanted to include a component on the qualitative analysis side as well, kind of looking at the management. It's just that it's going to get a little bit longer. So, yeah, so let me know if, what your thoughts are. Just any feedback is really appreciated so that I can, again, create content that's more curated for all of you guys, and that's what the channel is all about, right? Trying to do analysis, unbiased, objective overviews of individual companies and see where the most of the opportunity really is. So Johnny, I just woke up. What was the report? Well, the report came in really, really strong. So we actually got a very strong labor market coming in. Unemployment rate edged down to 3.5%. We added over 263,000 jobs. And you know what that means. That just paves the way for the Fed to keep hiking rates as aggressively as they can. And of course, that pretty much is the reason why the markets are selling off. So, yeah, that was the jobs report in a very quick summary there. Lady says, love all of your videos. Thank you. I appreciate that very much. Kevin says, I love the deep dive stuff. So what we can do is, again, in the future, I'm also thinking about maybe publishing these reports on our Patreon, kind of like one-pagers. 1 or 2 pagers. I'm still trying to think about the different metrics and characteristics that I want to actually put on that report with the spreadsheets and all that stuff. So maybe we don't do like longer videos. We keep the format that we have going on for now. But in our Patreon, I'll start releasing 1-page, 2-page reports, kind of going over the qualitative analysis as well, because I really want to touch on that. I don't think we cover that enough is what I'm saying. So we'll talk about that. Yeah, hit that like button for me. So for the channel, for all of us. So again, make sure that you drop a like. I really, really appreciate it very much. So would appreciate it if you guys just dropped a like and of course subscribe to the channel. So we're ready. 13 minutes to go, and we are ready for the markets to open up here and just pretty much close out the week. We're still up on the week though, so that's some momentum on the week. I mean, the Nasdaq's up 4.7%, but again, this is the second rejection that we're getting. Second rejection. So Victor, no, that's not an in-person interview. I'm actually still waiting to hear back from them. They told me that they were kind of busy, and October was the time when I had to reach out. So still waiting to hear back. We'll see if their schedule kind of clears up for a quick discussion, but no, it's not in person. It'll still be online over Zoom. So yeah, 200 SMA, we're getting a big rejection there. Last week also we got a retest at that 200 SMA, rejected again, and even this week we kind of traded all the way back up to 11,002, but then got a rejection there as well. So we pretty much came right back down. So support level is going to stay put at 10,500. Caddy Rocks, I like the way you approach this as a team effort, learning in my opinion as a team sport. Ronaldo, thank you, I appreciate that. And yes, it is a collaborative effort. Again, we're doing analysis and research, and it does require a lot of, a lot of different perspectives and opinions. I think that's the only way to kind of minimize risk as best as we can, so that we are aware of all the opportunities. It's kind of like a SWOT analysis on every company, right? We're trying to understand the strengths, the weaknesses, and of course the opportunities and the threats as well for every single company that we analyze. So, yes, I really appreciate all the efforts that you guys put in with some great ideas, great research. So again, if you want to be part of our Discord, we share a lot of research there. A lot of our members are super smart, intelligent, sharing some amazing analysis there as well. So we're able to continue to kind of move forward in that sense. Yeah, so 10,500 is going to be that support. The implied open today is about 1.82%. So we're going to open somewhere around 11,000, 11,060s, or actually no, 11,000. Actually, we're going to open sub 11,000, so we're going to be at 10,800 at the moment. But we'll see if you actually do break down below this support from June 13th. So that's going to be the level to pay attention to. All right, so we're ready. About 13 minutes, actually 12 minutes left now for the market to open. A lot of cannabis stocks actually obviously pushed higher. I mean, TrueLeaf was up a whopping, 36%. It's up another 8% right now. So let's see here, of course, on what Biden mentioned. So a lot of them obviously pushing higher quite a bit. This has been a big downtrend for TrueLeaf for a very long time. And again, with cannabis sector also, I mentioned that it's not a question of if, it's a question of when. TrueLeaf is one of those companies that in the cannabis sector I do like very much out of all. They're kind of going through a restructuring phase. They actually did acquire a company here, so they're kind of going through that process of kind of getting rid of their debt, getting back to that operating efficiency and generating some of the adjusted EBITDA profitable earnings and cash flows as well. It's going to take some time. Margin's been a little bit dwindling over the last couple of quarters, but I expect them to get back on track starting 2023 even further. And right now it's another 8.4% in the green, trading at almost $13. So this is another one that, again, we'll be paying attention to. Almost all cannabis stocks, I think, were higher quite a bit. So Aurora Cannabis, 7%, right now up 1.5%. What is the Tilray? Was up 30%, up another 2.5% right now. So very strong move to the upside for this stock as well. Mad Money says, wow, love the name. Mad Money is here. 10-year, 30-year inverted. Wow. Yeah, it's been inverted for quite some time. I mean, this is the spread we're talking about. This has actually been inverted for quite some time now. And we are now at negative 0.036%. So that spread is negative. So Tesla still a buy at 270, anyone? So Tesla, let's take a look. We are down to 234 right now. So we did, of course, talked about Tesla quite some time. We've been pretty much covering on the channel for a long time now. But this was, again, we did a poll on where that bottom for Tesla is going to be, or the lowest price that Tesla is going to come down to. 275 and 250s are out of the race. Now we got $200 as the next potential support and the target. So we'll see. I mean, we'll see if it gets down there. It's only 10% away, right? So we're almost there. So Tmo Quick Analysis, or thoughts, please. So Slight Less Wisdom, thank you so much for that. I really appreciate the donation. Let's take a quick look on Tmo. All right, so looks like a lot of consolidation since December 21, but it's kind of held up much better than some of the other stocks. I mean, year to date, it's only down 18%. That's actually in line with the S&P 500. Very good revenue quarter over quarter, year over year. It's been on a consistent revenue growth here. Earnings have also been very strong. Let's see, dividend yield non-existent, but it's a $211 billion company. So Thermo Fisher Scientific. Let's take a look at the valuation here. So it's a little bit rich, 30 times earnings, 24 times cash flow, and over 5 times sales. So a little bit on the upside for the actual valuation, but earnings forecast, they're trading to change the earnings forecast a little bit. I just want to see something here very quickly. Okay, so they do have like a gray bar now. I liked it. I liked it the way it was before. I don't know why they keep changing things up here. But yeah, earnings expected to kind of decline a little bit in 2022 and then kind of reaccelerate once again. Revenues expected to be very stable, very small growth though. Like they're going from about 40 billion to 42, 44, 48, and then 52. So they're growing at a very decent rate, I would say. Like that's about mid-single digits to about high single digits. At 540, valuations is still a little bit high. 29 times earnings, 27 times cash flow. A little bit rich, considering that revenue and earnings growth may not be as anywhere close to those numbers for TMO. So, and from a technical standpoint, seems to be getting validated perfectly here at a very strong support, roughly the 518, 520 levels. This has been a previous resistance for the stock, and right now trading at a very, very strong area of support and demand for this company. All right, so let's see here. Yeah, Tesla got an investment grade upgrade, yep, to BBB, I think, for its corporate bond, so that's really good. Patrick, what indicator you use on your TradingView? So there's a lot of different indicators that we use on TradingView. From a technical analysis standpoint, depends on a lot of different things, such as time frames, your strategies, and what indicators kind of work best with what your goals are. So again, there's a whole lecture on the technical analysis course that we pretty much go over. There's a whole section on indicators, and we talk a lot about divergences and crossovers and a lot of different types of indicators that you can use, and how to calculate them, how to put them on your chart, and which ones I use, which ones I prefer. So if you want, you can check that out also. It's available. So fair value in CRM, Alfred, is lower than where it's trading at. I think it's low 100s. So yeah, 115 I think is what I remember. Might have to go back and check my own videos and what the assumptions were, but it might be on the fair value as well. So Alfred, if you can go onto our Google spreadsheet, you will be able to see our fair value there. You should be able to see my intrinsic value on pretty much every stock that we've analyzed so far, and I will be updating that in October, and of course right now as well, as I'm pretty much done with the September month, which is very brutal and kind of been swamped. But we'll be updating more and more fair values on that spreadsheet. So yes, you can check that out over there. I think that CRM update is on there. Elvis, Caddy, you're still bullish on AMD. Elvis, what do you think? What is your guess? Let me know what you think. So, all right, we're going to switch over to the actual indices now. We'll see where we open, and then we'll also open up the charts for individual stocks and see how they're trading on the day. Ellis says 100% yes. Yes, you're correct. I am. I think it's a little bit of a setback. I mean, if you take a look at the big picture, and again, a lot of the detailed analysis is done in the previous video on AMD, so make sure you check that out if you're interested, of course. It goes over the fundamentals and, of course, what the guidance might look like. But if you look at the big picture, okay, so they're pretty much guiding down about $1 billion, right? They went from 6.7 down to 5.4 or something? Can't remember, 5.7. I think they went from 6.4 down to 5.7. Yeah, I think that was it. So they're pretty much guiding for 30% growth on a year-over-year basis, and that's down from 55%. The first 6 months, they actually grew by almost 70%, so that was really good. The second half of this year, even if they grow by 30 to 40%, Herschel, has your fair value changed for AMD? Yes, it did. If you want the full analysis and the thesis, again, make sure that you watch that video. I literally just posted it. Well, actually, it's been a long time. We've been live for quite some time. I posted it about an hour ago. So if you check that out, you should be able to get the full detail analysis and my new price on advanced micro devices. So kind of takes into account the fourth quarter guidance, what might be for advanced micro devices, and keeping all expectations same with very conservative estimates. You should be able to see that over there. All right, Apple down 2%. We got Nvidia down almost 4.5%. Tesla is down over 1.5%, and then we got AMD, of course, down over 5% at the moment, trading at just a little bit over $64. Google looks better than AMD now. Yeah, Google does look better. I guess they're both really attractive from a valuation standpoint. But I don't think Google has kind of cut their guidance, but they have, they're expected to kind of post very moderate numbers. Like earnings are still expected to come down for this year from 543 down to 523, and revenues are expected to be like about a growth of about, let's see here, 288 divided by 257, a 12% growth, right? So modest growth here. 12% growth for Google versus 50% growth for AMD. On a growth adjusted basis, certainly AMD is a better choice, but earnings hit might be more intense for AMD versus Google. Green mic is coming for Christmas Caddy. All right, let me just say this. Green mic is going to happen when we kind of hit our economic signals, okay? Once we hit our economic signals, I will bring out the green mic, period, okay? Waiting for my economic signals to get hit. We've got broken down our signals into 3 different categories: fundamentals, technicals, and macroeconomic. Once our macroeconomic signals get hit, I will bring out the green mic, okay? So we got to be patient. It's going to be a while, but we have to be patient. But once it's there, we will be ready. Kevin, so waiting for Powell to flip? Not necessarily. Not necessarily that's the only reason. But again, those are some of the macroeconomic signals that we have, that we've been tracking. That's what we're really watching. Mike on a mix. All right, so we are ready. We are ready for the last day of the week. Chenta says, Caddy, do you even own a green mic? We don't believe you. What do you think about Trulieve in the cannabis market? So I talked about this earlier, so you can kind of go back about 10 minutes and then kind of check that live stream, and you should be able to get my thoughts there. But we are ready for market open. It's going to open down about 1.5%, closer to 2%. We'll see what the day kind of brings today, intraday. And yeah, and then, same time zone. So I will be able to, of course, be a lot more engaged during the day. And we'll see if we can actually do a closing live stream as well. So no promises, but we'll definitely see if we can actually do that. All right, S&P down 1%. The Dow is opening down 275 points, and Nasdaq's going to be pretty more brutal here, down over 1.77%, with the yields still climbing almost up to 3.9%. Yeah, Qs are still green on the weeklies. We'll see if they continue to kind of hold that weekly chart. More than likely, they might. I mean, they're almost at 3% on the week so far, and this is after a 1.6% down open today. So in order for the week to be red, the Nasdaq would need to actually come down another 3%. That's like 4.7, almost a 5% red day for the Nasdaq today if the markets were to turn red for the week, which I don't think is going to happen. A really, really low probability, like that's 1% probability that might happen, in my opinion. So yeah, I think the week is still going to be green, but we're in due for some volatility intraday. All right, so this is where we open. 275 is going to be that resistance for Qs right now. This has been a previous resistance as well. So again, if you check out, this is the 5-minute chart, right? If you take a look at how we've traded in the past, big rejection for the Qs here. This right here, another big rejection, like to the T, 275. We just struggled to break out over that level. And right now, and that's, of course, it's acted as a support once we broke out. And right now, we're just kind of testing 275 once again. So quick in the chat, let me know if we're going to see a breakout or a rejection, like a validation of that resistance. Once again, we're going to start to roll over. Switchik says, Denver, plenty of green there. Be careful, Caddy. Yes, I'll make sure. Thank you so much. Unker says, my wife said I spend more time with you, Caddy, than her. Unker, appreciate that, but definitely do spend time with your family as well, man. Family is very, very important. So, all right, couple of rejections for now expected. There we go. A lot of people expecting a rejection at the moment. So we'll see if the buyers do indeed step in. But interest rate expectations definitely are moving back up to 75 basis points, right? So we last saw it. There we go. So again, we talked about it at the beginning of the live stream, how this number was down to 75%. And, we were talking about it during the course of the day. Wouldn't be surprised if this actually moves up to over 80%, 85% as we got a very strong jobs report. So again, good news for the economy. Sure. Bad news for the market though, because, well, we're starting to price in more aggressive Fed. And the good thing is that once we start to kind of front load these rates, that's a really good thing, because if and when that time comes where the Fed finally decides they're going to slow down on these rate hikes, because they're not going to keep going on forever, right? That's going to be the time when you better hope that you're invested in the markets, because these rallies we know can be very, very strong the strongest rallies you'll ever witnessed is during a bear market, right? We talked about it in our previous market updates where you will never see like a 4%, 5% green day for the markets during a bull market. You'll see like a 0.5%, 1% move, but these strong moves happen because of how oversold we become. So yeah, it's just very much a patience game at this point. Rejection. Pedro says no pain, no gain. Yep, that's correct. Only pain this year. Yeah, but we're setting up for very strong potential opportunities at the moment, right? So Tesla down to 231 now, 2.7%. Drop here, almost 3%. You know, if we come down to $200, that would be crazy. That'd be like, you know, we'll just do like a video of just not even talking, just Tesla at 200. Like I'll just leave that on the screen. That's it. Not even talking about anything else. That'd be crazy. That would be like a real testament to all of us, like who've been waiting patiently for so long. So that'd be very nice if you can get it down to 200 or lower. So semis all down, all red. Not a surprise. AMD kind of leading the way, kind of charging ahead with that sell-off, down almost 7%. So Oscar, how is Meta flat and not selling off further? Well, those companies have already repriced a lot. I mean, if you take a look at, all right, so there's one stock that we've talked about during our market update live streams. I want to see who's been watching them religiously. What is the one stock that I've mentioned more recently that's really outperformed the markets really well? We even did like a relative performance update on that chart. Like we talked about it, how this stock against the S&P, against the NASDAQ has performed really well. All right, so we do have a couple people watching. That's great. PayPal. Yes, PayPal. Man, you guys are on point. That's awesome. And yes, PayPal is doing really well, right? If you take a look at PayPal, of course, end phase this year, but that's not part of our market updates yet. But we have talked about PayPal. PayPal is doing really well over the last, I want to say, a few weeks. Again, if you take a look at PayPal versus SPY, look at this outperformance. I mean, since, you know, the bottom in July, it's moved up over 38%. PayPal against the NASDAQ as well, you know, we've seen a 40% gain, right? So, I mean, most of these names like PayPal, Meta, I think they've sold off so much where we haven't really seen, so Meta's still underperformed, although it has been moving sideways more or less. So we haven't really seen a lot of downside for these companies. I mean, even though S&P and NASDAQ are back down to their lows from back in June, PayPal is nowhere near close, right? It's still up a little bit over 32% from these levels. Palantir, well, Palantir is closer to its June lows. Well, actually, May low. May was a low for Palantir. So we're you know, just pretty much back to where we were back in September, earlier last month. But Enphase, of course, Enphase has done really well, although it's now starting to roll over. It's down a little bit over 22% from its recent highs, and you know, there's been a negative divergence kind of brewing for some time. So again, we were very careful with Enphase, but this is another stock that again we'll be taking a look at once the valuation comes down. Once the stock price is much lower, we'll take a look at that once again. But Enphase has been incredible, no doubt. It's performed really well. Miami Walking says, best guess, haven't watched. Come on, you got to keep up with those market updates, man. No, I'm just kidding. I totally get it. But yeah, PayPal was the one that we talked about. Anthony says, Caddy, Tesla is still way overvalued. Well, you know, that's been a discussion, that's been a debate since the beginning of time. I feel like there's been a back and forth for Tesla's valuation, right? So we can be here talking about Tesla's valuation for hours, and we're still not going to get anything done because there's going to be so many different opinions and perspective. And again, we all got to respect everybody's perspective and of course what their opinions are on valuations and how we kind of view the world moving forward. But yeah, we're just going to Says Anthony is nuts. See, that's the point, right? We're gonna be here for hours talking about valuation, because valuation really is just, numbers based on earnings and multiples and what the addressable market is and what the revenue numbers might look like in the future. So there's gonna be a lot of healthy disagreement there, but that's where we are. So QQQs, look at that. So double resistance there on 2 5-minute candles. This one right here getting rejected at 275. This one right here to the T, 275.15. That was the high for today. And we're still seeing some red candles form in. So we're starting to kind of come right back down. We'll see if we actually do find any buyers that can break us out back to over 275. But of course, a lot of individual stocks here not doing super well. AMD almost down 7%. Apple's holding up barely. And then we got Nvidia down 4%. And Tesla also trying to recover a little bit. Yes, per peg ratio, Tesla's not overvalued. Correct, Richard, you're right. However, of course, if the growth rate slows down, and that's really the main thesis behind why my intrinsic value is lower, if the growth rate slows down, then that peg ratio jumps up, and then we got to recalibrate that peg ratio down. So, all right, so quick check on the markets. DraftKings pushing higher. I heard somebody mention that DraftKings is getting a partnership with, what was it, ESPN or something? So there we go. All right, let's take a look. DraftKings shares rose pre-market after Bloomberg reported the Walt Disney's ESPN is close to entering a large new partnership with a sports betting company. The agreement could help ESPN take advantage of the growing wave of legalized sports betting. And Bloomberg reported, citing people familiar with the matter, and the structure and details of the partnership were not immediately clear. ESPN declined Bloomberg's request for a comment. So we don't have clear direction on what the partnership terms and agreements going to look like, but 7% move to the upside. Is Disney moving up? Disney is slightly down about 1.6%. So not a lot of an impact on Disney. It's a much better deal for DraftKings, I'm assuming, than it is for Disney's ESPN, because DraftKings gets huge exposure to so many users and people by partnering with ESPN, right? I mean, I think ESPN, last time I checked, if you take a look at Disney earnings, let's see. We'll just take a quick look on the actual numbers. All right, this is as of May. Earnings report. So if you come down. All right, so ESPN Plus has about 22.3 million subscribers as of April 2022. So again, that's a pretty good number. I mean, the growth has been phenomenal. 62% growth on a year-over-year basis. So that's a pretty substantial amount of user base that DraftKings can start to kind of tap into. So a very strong move, up 6.5%. That's the only stock that's actually moving up on the day so far. And we do have some other companies like TrueLeave is still up, up over 4.5%, almost 5%. This obviously had a big rally, 30%, 36%. It was up 8% pre-market, but right now kind of giving up on some of the gains. Enphase holding up really well after selling off quite a bit, 22% from all-time highs. And then everything else is just straight up down and selling off. The most red we have is on growth generation. We got Roblox, CVS, Coinbase, Fiverr, all of them selling off. LAB is down 4.5%. I want to see InMode. I'm actually planning on closing out my call on InMode. It's up like 30-35%. I really don't want to hold on to that anymore. And then we'll be selling the shares as well to take profit right now to kind of raise more cash. All right, CAR. So Avis Budget. So yeah, it does seem like it's been consolidating for a very long time, kind of sideways. So this has been like a very strong area of support that it's just been trading in. We do have a very strong resistance. I mean, if it can break out over above this level, Patrick, then I think you're correct in your analysis that there might be a bigger move to the upside, because we've got this big confluence of resistance here. Not only do we have that moving average, we got the 200 SMA, 300 SMA, but we also have this previous resistance where it's been rejected at, and that's sitting roughly at around 197, 198. So that's a level to pay attention to for CAR, to see if you get the big volume burst and breakout above. Really, I mean, theoretically, what you really want to see is like a big breakout, a retest, and then a continuation of that pattern to the upside. So that's something to pay attention to if you're looking for a breakout for this company. All right, Brandon asking, Tattoo Chef going to zero. Let's see, down another 2.5% of 473, and I can't really tell you. I mean, I did a video on Tattoo Chef. Like, I've done, I think, like 4 or 5 videos on the channel on Tattoo Chef, so you're happy to kind of look at those. I don't even know if I still have the analysis or the spreadsheet on TTCF. Oh, maybe I do. I think I do. Let's see. All right, so this was the actual numbers for Tattoo Chef. If anybody's still interested. I think we also talked a little bit about the liquidity for the company and what that might look like moving forward. The bottom line is, if they can't improve their gross margins, well, then it's going to be very difficult for them to keep growing and, of course, keep moving in the right direction, because their cost of revenue is pretty much as much as their revenue. You know, their gross margins are pretty much like 1 to 2%, which obviously is not something that is attractive, right? So, I mean, over time, as you're doing more scale, you want to be able to make more money. You want to become more efficient. You don't want to go the opposite way. Like, you don't want to be in a situation where the more you're selling, the more your costs are getting, right? The less you're making in terms of gross profit. So, man, New York always has like sirens going off, like ambulances everywhere. Like, it's always a norm. I don't know if the mic's picking that up or not, but so look at that third resistance, like 3 times we've been rejected at that level. Like, the 1-minute chart might look crazy right now. So you can see like 275, very strong resistance on the Qs. We're just like consistently getting rejected there 3 times, once at the open, then another time like 6 minutes into the trading session, then another 10 minutes into the trading session. We just all getting rejected there. Kevin says it's NYC, baby. Yes, it is. Definitely is. Richard says you hear sirens in New York. What a shock. Jim says they're coming for your red mic. Oh, they better hope not. They better hope not. If this red mic, something happens to this red mic, then I'm definitely gonna get a bigger red mic. It's gonna be much more bulky, much more red and more bulky red mic. It's gonna pretty much cover the entire face. Like, I'm gonna be talking like this, so you guys won't even be able to see like me. It's gonna be just like this giant red mic talking. So yeah, you better not do anything to this red mic. So anyway, the markets here, not looking super great. So I'm not sure, what does ASMR again stand for? And like what? Yeah, I'm not too familiar with ASMR. Alex says, I wonder why Cadillac so happy now when the market says so red. Yeah, it was pretty off, right? Earlier this week when the markets were pushing higher so much, I was like, yeah. Volatility here is up 1.5%, Kevin. So I think it was lower before, but it's starting to push right back up. It's back over 31 levels for the VIX. It's up over 1.7% at the moment. Marcus says the car alarms drive me crazy. Sirens go away fast. Yeah, that's true. I think there was a car that was like going off this morning at like 5 in the morning. Luckily, I was up at 4. But yeah, if I were sleeping, I would have definitely just punched my window or something. Definitely would have been very frustrated if that woke me up. Autonomous sensory meridian response. Okay, interesting. Jet lag's not been that bad, Nicholas. So again, I did get some good sleep, 5 to 6 hours last night. And hopefully I just don't fall asleep later during the day. I think that's going to be the big challenge, where hopefully when it's really late over in Asia, hopefully that's not a problem. I just got to stay up today. That's all it is, and I'll be fine. So, All right, so I'm going to end the poll. We haven't caught up on that poll yet, but 73% expecting the markets to be red, which again makes sense considering where we are. Guys, also make sure that you drop a like. We're at 260. Let's see if we can at least hit 400 likes right now. And then we'll just do a very quick poll on Tesla. Where will Tesla bottom? All right, new poll. I know we did one just a few weeks ago. We were talking about 275, 250, and 200. Since those two levels have been breached, we'll start with 200 this time. We'll go down to 175, and then we'll also go down to about 150. All right, those are the three options there. I don't think we need another one, because in that fourth scenario would be very, very brutal. But let's just see where we end up with this poll here. So big rejection on the Qs, right? Just not able to break above 275 on the SPY. We're not testing that resistance yet at 371, 370s. So we're starting to kind of sell off even further. Support level is going to stay put down to 363. Power nap, yeah. Yeah, I've not been a huge fan of power naps. I mean, it's either like taking a full nap, which lasts about a couple hours, or just sleeping. Power naps are kind of like, what is it, 20 minutes, 30 minutes? That's about as much time as it takes me to fall asleep, to be honest. So like, not really a huge fan. Is AMD a buy now? So Ashraf, make sure that you watch that video, guys. If you want a full detailed analysis on advanced micro devices, we literally just talked about it 1 hour ago in my update video. So that will help you really get a good sense of what I'm looking at, and of course what fundamentals we're talking about. Down over 8%, trading at 62. So that also goes over my fair value, my new revised intrinsic value on AMD. So I would appreciate it if you can just check out the video so we can kind of address some of the newer questions here in this live stream. Kang says, yeah, without the 10% margin of safety, AMD is in range. Correct. Yeah, Nasdaq really rolling over here. Still green on the week, though. We'll see if that continues. So target will $50 is going to be that support on a technical basis. So that's a more of a support from a technical standpoint for advanced micro devices. CVS, wow, 7% decline here. So healthcare stocks lean lower pre-market. So expects percentage of Aetna Medicare Advantage members in 4-Star Plus plans to drop to 21% in 2024 from its current 87% after the Centers for Medicare and Medicaid Services cut its rating for the company's Aetna National PPO to 3.5 stars. Yeah, a lot of the healthcare stocks seems to be kind of pulling back here quite a bit. Let's see. Let's take a look at. Do we have a healthcare watch list? Maybe I need to kind of create that. Let's take a look at Walgreens. Yeah, down 2%, coming down now under $32. But CVS, we have done a video on CVS as well a couple times. So there is a support here, a very, very strong support sitting roughly at around 87.50. So Brian, that's what I'll be watching at. You know, very strong. Previous support validated back in November 21. This right here back in June of 22. And right now we're just getting down to those levels again, all the way down to lows of about $82 to $79. So that is going to be that level of very strong demand for CVS inside this green rectangle here. By the way, how's been the Wi-Fi so far? Again, I don't want to jinx it, so I'm going to knock on wood here, but how's been the connectivity? Good? Good, right? Uncle, not interested in Walgreens anymore? No, I am. The dividend's definitely getting up to very, very attractive levels, so it's almost at 6% now. 5.95%, 6% for Walgreens dividend. Like really, really attractive. Will dollar cost average, but not really just buying right now. We'll just wait a little bit as I do see like better opportunities elsewhere right now. No lag, good, great. No power outage either. Yeah, I know. It's pretty good, right? Pretty cool. I'm excited to be able to access this for the next month or so. Yeah, so Fang Mint, all of them down starting with AMD, Nvidia, Microsoft, all of them. And then we got pretty much every single stock here selling off except for DraftKings, which is kind of giving up on some of the gains, and Truly was also pulling back. Of course, it was up over 8% pre-market. And right now, of course, coming off quite a bit. Alex, that's not true, man. The market's been selling off since the beginning of this year. It's not just that when I moved here that it's selling off. It's been coming down quite a bit. So Arun, where do you feel better opportunities other than Walgreens? Well, really, it comes down to, like, from a dividend perspective, sure, Walgreens is a great stock in my opinion, but I'm also looking at more on the growth side. Again, AMD, Meta, Google, some of those companies kind of selling off. So again, really from a perspective of the volatility, it's not quite there yet, right? If it gets up to 35, 40 levels, that's what I position myself as a net buyer, and not at the moment. So we're just gonna have to wait patiently for when those signals get hit, and that's when we can start dollar cost average again. Caddy, will you be traveling to other states? Yes, I'm actually traveling to Boston, New Hampshire, and then Denver, Colorado. And then we'll be in Europe for about a couple weeks. Lower cash skip puts on AMD. Yes, we'll be looking at lower strikes for AMD. I was doing some analysis earlier. Actually, today might be a good day to take a look at, what that cash skip puts might look like on advanced micro devices. So let's see. We're looking at, let's say, 1 month out, November 4th. Yeah, we got some good premiums. If you come down to $58 strike, 242. So 58 minus 242, we're looking at 55.58. That's about a 4.3%. That's a really good number. 4.3% for 1 month. If AMD were to come down to $50, which is possible, very much a possibility, but we've got a 0.3 delta. If you go down to $55, because that's what I look for, like in terms of delta, minus 161, 53.39. We're looking at 3%. Hey, that's really good too. That is an option that I might end up selling today. 3% for 1 month at $55 strike for AMD. I like that. Justice says $3 haircuts, power outages, and bad internet, or $40 haircuts, sirens, and great internet, and no power outages. Tough decision. It really is. It really is a tough decision, to be honest. Yeah. So, so that's gonna be it for now. I'm definitely gonna take a little bit of a break. I actually have a meeting coming up as well in about a couple hours, but we'll see if we actually do a live stream, before the markets close as well. And then, I'm just going to send some updates and alerts over at our Discord, and kind of share my thoughts, what I'm seeing for the markets today, and of course, closing out this week and going into next week. So thank you so much for joining, everybody. I really, really appreciate it. And we'll take a quick look at our poll here, 51%. Now, majority of people expecting Tesla's going to come down to $200 at least, and then 29% expecting 175, and 20% expect Tesla's actually going to come down to 150. So interesting poll there. So once again, thank you so much for joining in. I really appreciate it. Make sure that you drop a like. Don't forget to, of course, drop a like. We're still not at 400. Let's see if we can actually get up to 400 here. Subscribe to the channel. Subscribe. We talk about fundamental analysis, technical analysis, macroeconomics, stocks and options, pretty much giving you a whole holistic approach and understanding of what's going on with the markets and, of course, individual companies. And the Discord link is going to be down below. The 16% discount does expire this weekend. So after the first week, it will be gone. So link's going to be down below if you want to join our Discord and our Patreon, get private videos and access to our community, buy and sell alerts, options alerts, trade ideas, all that stuff is going to be included. And not to mention the fundamental and the tech analysis courses with over 80 plus lectures with a 40% discount, right? That also expires very, very soon. So that's going to be the first link down below. So thank you so much for joining. I really appreciate it. And as always, of course, another siren. Happy investing, and I'll see you guys in the next live stream. Take care.